So in tonight's free trading video, let's take a look at the four horsemen, which is Apple, Google, Amazon, and LinkedIn. So we're going to take a look at Apple. Apple had a little bit of a pullback. Now remember, they've got a little unfilled gap here that needs to be dealt with, and you can see that even as all the other markets were down today, it held its own. So that bodes well for Apple. It looks good. It's a sell here on the value chart, but the price action's going, dude, I don't care what you say. I am not a sell. Price action saying I am a stud and I'm going higher. All right, Google, you have a half a gap fill here that needs to be dealt with also. Here's going to be your high move, and there is your low move. So we're looking for a trade. Oh, look at there. Perfect half a gap fill on Google from the earnings yesterday, and you can see it pulled back to 50% retracement. You could have purchased it on a swing basis there. I still think it's going to fill its full gap. So you have two opportunities. So if you have a plan and it's a predetermined plan, you could, number one, you could just go ahead and get you your first position here, and then your second position would be here. Now this is different than averaging in. All right, averaging in would be you buy along here, you buy along here, you buy along here, you buy along here, and you just keep buying with no plan. This would be entry one, this would be entry two, and your stop loss would be here. Now what we're trying to do is we don't know if it's going to hold here and start to bounce higher, or if it's going to roll back over. So what we're doing is we're placing two bets. We're placing a bet here, and we're placing a bet here, and we're drawing our line in the sand saying, look, if you cross this line, I will cut your throat and let you bleed out. All right, so that's a decent trade setup for Google. I like that one. Take a real quick look at Amazon. Amazon held its own pretty much today too, so acts really good. There's no trade. There will be when it breaks above this 250 area. It'll be along again. And then LinkedIn pulled back with the rest of the market pretty decent. I don't so much as trade LinkedIn as I just like to watch it for when Facebook goes IPO, so I can kind of get a little head start on the rest of the trading crew and kind of know what's going to go on when that thing goes IPO. We've got an upcoming How to Trade Volatile Markets with John Carter and myself, Hubert Centers. It's this week, Wednesday, October the 19th through Friday, October the 21st. And we'll be, the first day is going to be all theory. In other words, we're going to teach the first day, and the second and the third day is going to be mainly all trading, live markets and execution, stuff like that. So it's going to be theory the first day. The second day and the third day will be live execution in the real markets with real money, with real accounts, which will either make real money or will lose real money, and you'll get to see how that's done. And the main thing that most people learn from this is just how to trade. So if you're interested, hit the buy button here, and member price is $197. Non-member price is $297. You can read the topics of what each one of us is going to talk about, and I look forward to seeing you there. Good luck with those.